Good morning. It's Thursday, July the 30th.
Yes, it is.
Last full week of July. Believe it or not, next week we're going to be in August.
Yeah, it's flying by.
Flying by. All right, today's the day. It's here. We said it was coming. It's coming. The market's reacting. Don't be worried. Don't be scared. It is what it is. The GDP numbers were unveiled this morning, and as we had said, they were going to be yucky, and they are. Yucky.
But they were better than anticipated.
Not as much yuck.
It's 34 was expected, 32 minus 32 GDP expansion for the second quarter. So again, we had seen and we had heard it was going to be as high as 40 to 45. So one could take away that it's not as bad as anticipated. Jobless claims were again over 1 million, 1.4, and continued jobless claims were 18 million. So, it's still a pretty bad environment out there for the unemployed.
The market is reacting to the U.S. Numbers that have just come out, but early morning prior to that, Germany and Hong Kong announced its GDP numbers year over year, and they're down also. Germany is down over 10%, Hong Kong's down over 9%. Not as bad as what the U.S. is, but not bad nonetheless. And then what is really was interesting to both you and me was the consumption rate has dropped in this last quarter. It's not surprising, nothing.
But almost a hoarding of money, 34.6% basically savings rate. The people are just not spending money on services, and they're basically putting money away in their money market accounts for a rainy day, and that's a positive. In all the negativity, that's a positive because they're very healthy financially.
And if you look also the reinvestment with companies investing in themselves, there was a huge decline in investment. Reinvestment in investment money is down almost 49%.
Not surprising. If you're a CFO of a company, spending money on infrastructure in this environment would be not necessarily a smart thing. We also have the four horsemen are reporting today after 4 o'clock.
Right.
Facebook, Amazon, Apple, and Google are reporting after 4 o'clock today. So I think the tide of the next several trading days will be driven what happens after the market closes today. So, tune in for that, watch for that, see what happens.
But this is where we said we were going to be. This is what we expected. This is where we are. We have gotten your portfolios where we want them to be in terms of balance between equities, fixed income, and cash. Our office this morning has been talking to our bond folks to be sure our bonds are in a good position. We're going to be in a meeting. We'll discuss what that result was. And we are holding cash and looking for opportunities to make buys.
That's correct. I mean, but the Dow is off. Last time I checked was off a little over 500 points. Perhaps opportunities could be created in the next couple of days for us to look at some possibilities. What is the real positive that is out there is that the earnings for companies, which were expected to be off by 40%, are actually the first 20% that have reported are actually up into the double-digit range.
Right.
So instead of being off 40, they're up 10 to 12% with 20% of the S&P reporting. Very positive. And if there's follow-through for the remainder of reporting season, that could bode well for the third and fourth quarter.
All right, so let's let the market digest and work through and react to the information we know. We're going to look for opportunities. Let's get into the third quarter. A lot to do, a lot to think through. We're here. We're doing it. Call us if you need us. We can meet with you in person. We can meet virtually with you. We can do it by telephone. But know that we're looking at this every week because it is your money.
And your money matters.
We'll see you next week.